Hello traders, think this is live now. Still trying to find a way to be able to share this link, but by the time you see this, link's been probably already shared. Let's see. Oh, here we go. Share. Okay, so that should do it. And hopefully some people are now coming in to the live stream. So today what we're going to do, I wrote down a little bit of a list. Today what we're going to do is go over some gravity questions. We're going to look at 1 month in, what strategies have I found and have other users found to have worked the best. We're also going to look at advanced data such as MDR, open interest, bid ask sum, and some other indicators that are not talked about in the guide. And then we're going to finish with scalping and supply and demand runs. So the first thing that I want to do is to look at the gravity questions. And at any time, you guys can comment in chat here, or you guys can also post in the Discord. All right, so now let's go look at the, well, there it is. Let's go look at the questions here. Okay, so the first one was, LTC is about to have a golden cross on the daily chart. It's been consolidating for days after small uptrend on the 4th. Will it break out soon? What's your take on its price action? What would be some other good confluence for it to enter into a long position? Is there going to be a liquidity pool? Stop hunting around the 51. I'm assuming you're talking about LTC USD. Can we ask any? Okay. A lot of questions in there, but let's first just dive into LTC. And let's take a look at, we'll do LTC, BTC, and LTC H19, the BitMEX and the Binance. We can also look at LTC USD. All right, so let me go over to LTC USD just to start with the price action that we see. If I can use Coinbase. So you're wondering, you said, is there going to be a stop loss hunt at 51 on LTC? What's the name? Hui or UA? All right, let's go check this out. Well, so currently looks like LTC is at a previous strong price zone. And let me just show exactly what I mean by that. That's this price zone here. It's a pretty wide price zone, but we are beginning to get into it. Actually, more concretely, we're also in this price zone here, this strong price zone around here. That one looks a lot better. It's around here. And you can actually see, and this was covered in the guide as well, that once price was actually able to clear these levels here, let me show this. Once price was actually able to clear these levels here, price had a much easier time moving higher. That's because, do you see just how quickly price had moved down here? Because price had moved down so quickly from these prices, price had a very easy time moving right back up. And the reason that occurs is because when you get a consolidation and when you get high volume points like that and high volatility points, something like that, these are the kinds of moves that can create trapped underwater traders. But when price moves so quickly down to here, then there aren't that many underwater longs who are going to be likely to sell, and that's why price was able to go higher. But let's look at your question here. So to answer your question of will there be a stop loss hunt and are we going to go higher on LTC, my main answer to that is that it depends on what BTC does. Honestly, if Bitcoin starts to trend upward, then LTC will probably follow, and if BTC starts to dump, then LTC is probably going to follow as well. The one advantage that we do have to look at is we can look at the global 5% MDR to look at the overall crypto buying and selling pressure, and we can also look at the LTC MDR. And those two metrics are going to help us really give the best chance that we can to answer that question. But I wouldn't rule out a stop loss hunt. It doesn't look too crazy, especially because, and this is another thing that was covered, we do have previous resistance did become future support. It had one touch here. So if price was able to come back down, I wouldn't be surprised if we had something like this. If price was to turn bearish, to get a touch at support, for not price to break support, for price to touch at support, which weakens the support level, price retraces a bit, and then, makes a stop loss on, and then goes higher with something, like that. That could be a situation that occurs, but let's look at not just the price action. Let's also look at what does the MDR tell us. So first of all, looking at the 1 week MDR, It looks like it's about neutral right now. It doesn't really look very bullish. It doesn't really look very bearish per se. Look pretty bullish here, very bullish here. These would have been some pretty good opportunities to buy crypto, the main cryptocurrencies. And it looks like really not much happening here. Let's go take a look at the Litecoin 5% MDR, because this is going to tell us how many people are trying to buy and how many people are trying to sell. So it looks like we currently had a period of demand here, and I'll zoom in using the 1 day here. So you can see it here. We currently had that very strong period of demand begin at about 1040. So we can go look at what happened at 1040 today. 1040 was right here, right there. And at 1040, we begin to see all that demand pick up. So price is around here, and then price rose about 2.5%. That would have been a really good scalp or a swing trade even. You see all this MDR pressure. And then also right before the big drop, what do we see? At 1020, we see a minus 12% MDR. And where was price at 1020? That was right before the drop. Because that data is recorded exactly at 1020, and this candlestick open was at 1020, meaning that MDR actually dropped to minus 12% on LTC right before the drop, as you can see there. So right before the drop, or even as price was dropping, you have that very bearish MDR. It flips at 1040, and price goes higher. Now let's talk about what's going on with the current MDR of LTCH. Well, currently it doesn't look like a great sign for the bulls. I don't love the sight of this. We're at a minus 8% LTC MDR, 5% MDR, which typically, more often than not, will lead to a downtrend. So if I was to place, a bet on, would I rather, I can even look at LTC H19, because I said I'd look at that one as well. Looks very similar. If I was to place a bet, and please, no one go to BitMEX and just start shorting like crazy after I say this, because that's, no, this would be a terrible price to short at. I think it's more likely the price is going to have an easier time moving lower because of that LTC MDR right there. Did you have any other part of your question that I didn't read? Will we have a breakout soon? Honestly, I think that the BTC MDR is currently very bearish. The LTC MDR is very bearish as well. So I think I wouldn't rule out a stop loss on it, and I also would not rule out bearish price action in the upcoming future. All right, do we have any other messages? Nope. Okay, so now you have, let's go on to Shoebox, and I'm also going to pop into chat to see how you guys are doing. Yeah, Dreamy Moonlight, I'm happy to go through your question. Now let's go with Shoebox and the question that you had. All right. Risk management, portfolio management question. Love those. How much % of portfolio do you risk in a trade, and how do you determine how much to risk? All right, let's first answer that first question. Then I'm going to go on to the second question, which is TPs and SLs. How much % of portfolio do you risk in a trade, and how do you determine how much to risk? My preference is about 2 to 3%. This is going to vary for everyone. Like, I'm not going to be able to give you a concrete answer of 1% or 5%, but I can give you a definite answer that is, what are you willing to go to bed at night and not feel like you lost everything? If that answer is, I can stomach the fact that I lose 5% of my portfolio and then go to bed and not freak out or feel really, really emotional about that, then you can risk 5%. If you don't like losing money, then you have to risk less. You have to risk about, that 2 to 3%. And with my portfolio, what I do is I might on Binance trade with half my account size and have a 3 or 4% stop loss. And if price hits my stop loss, that's only a loss of 1.5 to 2% of my portfolio, which is a decent amount, but it's not something that's going to wreck me completely. So short answer to you, Shoebox, is man, I would say anywhere from about 1 to 3. Long answer is whatever you're willing to stomach for your risk, and that really also determines the risk. One thing that you do need to be very careful of when we're ever talking about risk and portfolio management, you need to decide this before you take the trade, because you don't want to enter a trade and say, okay, whatever, risk, and then you enter a trade and you're like, oh, I'll keep this at 5% risk, and then you lower your SL, your stop loss, and then it's 10%. No, you need to decide before you take that trade how much you're willing to lose, because you don't want to let the emotions of a trade kind of sweep you away. Question: how do you decide when to ladder in multiple positions versus just one TP? one take profit level. Do you mean one entry order level? And do you prefer trailing stop losses or fixed stop losses? I actually prefer fixed stop losses. You know, the benefit of a trailing stop loss is that you get the benefits of an uptrend without, you know, losing out. You just continue to make profit. But the issue with high volatility coins on BitMEX, if you're trading XBT, UST, or FUSD, those are swinging around so much that your trailing stop loss is very likely to get hit. If we're talking trailing stop loss on Binance, you can't use a trailing stop loss on Binance, but if you used a bot or service to do that, I think I would still prefer fixed stop losses. That's just my preference. I like to look at the order book. I like to see where the bids are very strong and then slide a stop loss right below that. Or I might look for periods of consolidation and then put it on the lower end of that consolidation. Because I expect that if price goes back down to a period of consolidation on an altcoin, that it's going to have a harder time moving lower because there was so much volume traded in that previous period of consolidation that my stop loss is probably not going to get hit. All right, how do you estimate where liquidations will hit? I recently used fibs. Is there any other way to estimate other than volume profiles? So you're talking about estimating liquidations. And I'm going to answer some of these too. So, okay, you say, how can we estimate liquidations? Well, I can show you the quick way. One way is just shift click on TradingView, and that's going to get you your percent. And if you remember the percentages for the 100x and the 50x, it's 0.49 and 0.51. So what that means for those who don't know is if you were to take a 100x position short, if price moves 0.51% up, you get liquidated. If you take a 100x position long, if price moves down 0.49%, you get liquidated. A really simple way to do this that I like to do is let's look for two things and just simplify it to just two things. Who asked this? Crypto Iski. Let's look for periods of consolidation and let's look for swing points. So swing highs and swing lows. So this is a swing high, this is a swing high, this is a swing low. And then let's look from those points measuring to see what levels are likely to liquidate some traders. Let's take the first one here. This is a swing low and we have a volume spike, meaning that a lot of traders likely had shorted here. If I was to draw up with a shift click here, you can see that it goes up and it liquidates just about anyone who did, I think any more than like 70 times leveraged had gotten liquidated from that. Another really beautiful one is we have a massive volume spike here, as you can see. Price goes up from the very low. Oh, this is interesting. Price goes up and liquidates any traders who may have shorted the very bottom on 100x. They get liquidated because price goes up at least 0.51, as you can see here. May have liquidated some 100x. And if you recall, the 50x liquidation is about 1.53%. So if price goes up 1.53%, then they get liquidated. And you can see that price went up about 1.79, 1.8. So anyone who had done any 50x shorts here had gotten liquidated. Anyone who had done any 50x or 100x longs here had gotten liquidated from this. I know that doesn't answer your question. I'm just showing that this move liquidated about everyone. But yeah, so that's what you want to do. You want to identify where the swing high and swing low is. So you could look at this point here, assume that some 100x longs had mistakenly bought the top. You shift click and you see where's the point of 0.5%, where's the point of 1.5%, and those are points where you may expect people to get liquidated. So here you can actually see this is a pretty one. Price went down about, looks like about 0.6 to 0.7%. So anyone who had went long here got efficiently liquidated here, and price reversed. And there was also a volume spike here, which is great. That typically leads to a reversal. And then if we do the final swing point that I will show you guys here, after any 100x longs had bought here thinking that this is going to go to the moon, price drops by about 3.2%, and that's going to liquidate just about, I think, anyone 25x and up. Because anyone who had bought the top up here, that's going to liquidate 25x, 50x, and 100x traders. So very, very efficient price move, very good for the market makers. But that's what you want to do. You look for those swing highs, those swing lows, and if you want to as well, you can look for periods of consolidation where the market really isn't doing much, because that's other times where longs and shorts may be entering. But my favorite is just swing highs, swing lows. Just draw from the swing high or the swing low. Second favorite would be consolidation. All right, I'm new to trading. What are some tools you can use to spot good trading opportunities on altcoins on a daily basis? You introduced market depth, okay. And what good news source market updates do you follow that help you stay up to date and can take action for trade opportunity? For example, positive news. I did not know these news after seeing the price jump in people's discussion. What are some ways to look for these good opportunities and plan ahead of time? Well, first of all, I have to admit, I don't read the news about crypto as much as I'd say 95% of other traders. It's not that I don't believe in the news. It's just something I'm not going to trade on. I'm going to trade on sentiment. I'm going to trade on the price action volume I see. And if news is reflected in that price action volume, then it is, and we'll see it. But I'm not the biggest fan of trying to refresh the page looking for any news article and then trying to buy or sell a coin because of that news. So what I would say to spot good trading opportunities, here's one thing that you can do, Yue. Let's go to vcdep.io. My favorite way of trading recently has been order depth. I think that's no secret at all. Here's one thing you can do. Let's look for just very liquid, high volume altcoins because we don't want to trade the coins that don't have a large amount of order depth. I'm also going to change this to BTC so we can just get prices in BTC. Now let's look for any coins that have at least 1,000 Bitcoin on their books. Let's do, we can do 100 Bitcoin. That's 65 right there. So we hit view all, and now what we have is all altcoins that have at least 100 Bitcoin of liquidity within the bids and the offers within 5% of price. Now what you want to look for first is the coins that have a very strong 24-hour MDR change. You can see that ICX looks pretty good here. You can see the Quantum, and these are plenty of coins you can trade on Binance or on other exchanges as well. ELF or AELF, you just type that in on TradingView. IOST, AE, and so on. And you can just keep going down. So these are the coins that you probably want to buy by looking at the 24-hour MDR change. Now, let's say that I'm interested in actually trading one of these coins. What's the second thing that I'm going to do after screening them for their order depth? Second thing I want to do is look at the 24-hour price change. To be honest, I'm not really interested in coins that have pumped up 20% in the last 24 hours. That looks to me like it might come into a situation where a lot of traders are just going to take profit, meaning they're going to sell, meaning that if we buy, we're probably going to get screwed over. So I'm going to look at coins that did not do this or even this. So something that's interesting is ICX fell 0.56%, but it has beautiful MDR. So let's click on ICX. Let's go take a look at what's going on with this coin. So you can see, we're going to look at when was MDR at the very highest, and the very highest that MDR was at 3:30 a.m., 3:12. So I want to go to ICX BTC at 3:30 a.m., March 12th. 3:30 a.m., March 12th, wow, was right here, was, yeah. It looks like there's a jump from 2150 to 410. I think that was because of the update on Binance or the maintenance that Binance had to do, but someone can correct me if I'm wrong on that. But basically, we see a beautiful amount at even 3 a.m., 3:30 a.m. We see just a lot of bullish pressure and price jumped. That would have been an opportunity you could have taken because you see such a strong MDR here that has really never been that strong ever. That's just a beautiful opportunity to buy here. So what would I do on ICX right now if I'm looking at it? Well, the first thing that I want to do is look for liquidity pool to enter my trade if I want to enter ICX. The second thing that I want to do is see a better MDR. I don't love the idea of going long at ICX BTC if the MDR is only down here. I want to see that MDR move higher so that we know that there's more bullish pressure, so we know that there's a higher probability that the coin will actually rise up. So to look for a liquidity pool, I want to look for psychological price levels, and I want to look for recent lows to see where retail may have placed their stop losses, where we can actually fetch a great price. One obvious one that may not contain a lot of stop losses, but maybe some short-term stop losses is here. Another one is probably here, and all I'm doing for this is just locating the liquidity pool right below this low. And then the best one, which if you ever had an opportunity to buy, you know, would be great, is right below this low. And then I'd say the final level where stop losses may be is right below 800. I would not be surprised if a lot of traders have their stop losses around the 799 to around here. You know, this could be a liquidity zone. But how would I actually trade this? You know, if let's say price goes down to here. Well, let's say price goes down to there. I look at the MDR on the 1 day, and I want to see that MDR as high as the highs or even higher. If it's not, I don't take it. If the price keeps going lower and it goes down to here and that MDR gets even higher, then I'm going to take it. But if the MDR stays like that, I'm not going to take it. Because what I'm waiting for here is enough bullish pressure to make the coin very, very likely to rise. So the odds would be in my favor. But we don't want to just buy now. That's typically not a very good idea. You want to wait until we get a better price. You know, we get to flush out the final sellers in the downtrend. All right, man. Trader Nat. I try to understand how Condor and Straddle. Can you give me an example or demo? Absolutely. All right. Let me just go to the chat, and then we'll talk about Straddle, and we'll talk about. Yep. Okay. I think this is only like 30 seconds behind because like I'm reading this now. But let's go take a look at straddles, and I'll do FUSD, sure. Straddles and condors, and long combination and short combination. So to start this off, let's go to the pages where that would be. It would be page 225, which is, almost got it there. All right, so this was a big part of the guide, the condor. This play can be made when you're neither bullish or bearish, and this is when we try to bet on price continuing to consolidate. So the advantage of the condor of putting a limit sell just above a recent price high and a limit buy just below a recent price low is that price more often than not is going to consolidate. If you look at any cryptocurrency, you're going to find that more often than not it's moving flat. So using that information, what we can actually do is bet on there being consolidation. And what can actually be a dream scenario is sometimes what you'll actually see when you do this is, yeah, price goes down here, hunts liquidity, goes back to consolidate, you take profit, awesome. But the dream scenario, when the condor works very well, is in an emerging trend. So imagine that, I don't even have to say imagine, we can just show it because it just happened on FUSD here. So imagine that you had done a condor here, and you believed that if price cleared, you know, I mean, this is such 2020 hindsight, I have to be honest. But let's just do it anyway. Let's say if you put a limit sell order right above here, right above this price high, and let's say like 136 point something, because you bet the price is going to go back down to consolidation. But price did not go back down to consolidation. It went even lower. So what you could have done is held, even though price went back down to consolidation on this move here, and then you take profit much, much lower. So that's one advantage of the condor. Just to put it simply, you either bet on consolidation continuing and it just being a stop loss hunt, like something like that right there, where consolidation, slight downtrend, stop loss hunt, price goes right back and just keeps consolidating. You put your limit buy there and you just take profit in consolidation. Or something like this, you know, this is a little bit different, but you actually get a trend. So that's how we would want to use a condor. When we want to use a straddle is a little bit more rare, but we still do want to use them. And the good news about using this kind of play, this is where we set a buy stop and a sell stop within consolidation. So imagine that we had looked at Ethereum and we expected a large amount of volatility to take place. So imagine you had placed like a dream straddle, you know, just beautiful orders. You put a buy stop here and a sell stop here, meaning if price goes down below here, you short, and if price goes above here, you know, you go long. And your stop loss for this long would be right here, and your stop loss for this short would be right here, you know, around the same level. So here's what would have happened. Well, first price went up. It would have filled your buy stop right here on your straddle, and you would have had a potential profit, you know, of a good amount after you send your take profit. And then price goes below this low, and goes far lower here, and that would have hit your limit sell, and you would have had both orders fill within, you know, a few minutes. Now, the really interesting thing about this double stop loss hunt that happened is you could have used either a condor or a straddle and been profitable, or you could have used a condor or a straddle and been unprofitable. If you had set really smart orders for your condor and put them like right above here, you limit sell at a beautiful price, and you know, if you put them right below this low here, this would have been a beautiful limit buy right there. And then a straddle, if you put a short-term straddle here, you know, buy stop, sell stop, then that could have worked well. So is your question, can you, yeah, so that's an example. And let's go through a demo of how to set it up. And I'll use XBT USD. Now, when I do this, I do have to say disclaimer, please do not copy what I'm doing. This is just an example. I'm going to show a demo of one way you could use a condor, but please just don't do this. One way you could do it is by putting a limit buy here at around the 37.20, or maybe you could even be a bit smarter and put it something sneaky at like 36.90, because you expect that if price goes down to 37.10, that amount of selling is probably going to burst the stop losses, and yeah, you put it at 37.90, 36.90 for your limit buy for your condor, and then your limit sell for the upper edge of that condor would probably want to be here at around, I'd say 39.16 39.16 flat. The reason I don't love putting it up here, this is not somewhere I think we want to place it for a condor, because for the condor we're betting on this happening. We're betting on a price on a stop loss on, and then price reverting back, or for price to just quickly dip down to here and then for price to revert back. But something that can happen here is this is a very weak price zone, right? From here to here, I just don't see any, I mean, there's no consolidation on this drop from here to here. There's really no time that was spent within this. You know, it took less than, I think, like half an hour when price was doing this. So if price goes above 39.50, I think that price would just shoot right up, at least on a high volatility wick, but potentially even on a trend that just continues to go higher. So I would say this is what I would do if I was you. I mean, don't do this, please. If I was you, this is how I would set up my condor. Now, how I would set up my straddle, and remember, a straddle is us betting on the price continuing to go in that direction. Obviously, I'm going to put it here. And then the other part of my straddle is probably going to be, I think here is fair. This would be the straddle. And what this would be betting on is that if price reaches this level here, the price is just going to continue going higher. And if price goes here, price is just going to continue going higher. Now, you guys may say, what about a stop loss zone? What's the advantage of this? Now, the one thing that you get with a straddle that you actually don't get with a condor that's really cool is this. I can put my stop loss on at, I could put my stop at something like 36.58 and my other stop here, meaning that I short here on a sell stop, and I'm betting the price isn't going to go here, and if it does, then I lose. Now you may wonder, Bennett, why would you ever place your stop loss that close to your entry and your stop loss this close to your entry here? What you're betting on with the straddle is that price is just going to dump. The price is just going to continue going lower, and when price does this kind of move, it doesn't always have time for a stop loss hunt. If it's moving on that much high volatility, you know, beyond this low, then price probably isn't going to hit your stop. So the advantage that we have here is the risk reward. I mean, you can easily get, let's say price goes down to like 34.80 in another stop loss, and your risk reward here would be, your reward is about 4% and your risk is only about what, 0.77. So this play only needs to work, I think, like 1 in 5, 1 in 6 times. And same with this, like let's say you put your straddle here and you put your buy stop there, and price stop loss hunts right above to 42.17, profit of 6.4%. Your stop loss is only like 0.8. So that's the big advantage of using a straddle. You get those very minuscule very small risk, because you're betting on very high volatility like that, or you're betting on very high volatility like this. Notice both of these patterns here, and then we're going to move on. This pattern here did not have a stop loss on after we crossed this high. We crossed the high here, and price doesn't just go lower, it just keeps going up. We cross the low here and price just keeps going lower. A very tight stop loss would have worked pretty well on both examples. The reason we want to use condors is when you expect price to continue to consolidate. So I think that wraps up the question. I think we talked a lot about the condor and the straddle. Now, I do want to get onto some content, but I first want to look at just some of these comments, and then we're going to answer some of them. Oh, I like this one. That one I've been asked many times. Many times. How long do you think that the MDR edge is going to last? Oh, I first want to read this one. I had a condor hit this morning. We had a long set. You had a long set of, okay, I need to see this on XBT USD. Then we'll move on to your awesome question of MDR. So you had a condor set at 37.57. 37.57. Let me type that in just so we can see on the chart. Jesus Christ. Okay. Wow. That's pretty impressive. So you said your long was at 37.57 and your short was at 38.86. Well, first of all, I think your long entry is phenomenal. 38.86, I think that's a bit of a mistake. And let me just talk to you why I think that's a bit of a mistake for an order. You know, this is 20/20 hindsight, but I talk about this a lot. When we put our limit order that close to a psychological price level that has not been breached in a long time, I expect so often that that price level is going to get just ripped through. So I think a more efficient condor here would have been right above 3,900, you know, to around these levels. You know, you did the right thing. I'm just saying that over time, I tend to find it more often that price goes just beyond a psychological price level, then price just goes to 38.86 and then just doesn't go higher. But let's just take a look at this. So you got your short filled here, and you probably placed it at 38.86 because it's just above these highs. That's exactly what you're supposed to do for condor. And you probably placed your 37.57 because it's very clearly, I mean, you didn't even place it below the low. You placed it at like the perfect price. So I guess you're just a trading god. Very good trade. I'm glad that the condor worked out for you. And you said you shorted here, you longed here. Did you short and then TP here? Did you take profit there? Because a short here that took profit there, that's that's about 3.33% on leverage. That's a lot, you know. That was a very good one. Crypto is key. Use the fibs for the short, and I use other indicators for the long. Yeah, you know, like I'd said, man, I would just recommend next time sizing up your short a little bit higher to more of a liquidity pool, just beyond 3,900, because I think that's a little bit more efficient. But your buy was just, you know, perfect. Yeah. Oh, your positions were closed when you woke up. So you just woke up to a profit because you placed really, really good limit orders. Okay, now let me answer, where was the guy who asked about MDR? I actually don't think that MDR is going to become obsolete. I honestly think that order depth is something very different than most strategies. Because order depth, let's say that the entire crypto market that I've revealed MDR, I've revealed BAS and these indicators to a lot of retail traders, they're going to be, if they see very bullish MDR, they're going to be limit buying or market buying, which is just going to fuel the MDR. So let's say we have a plus 10% MDR, right? And let's imagine that half the retail trading community, which is, you know, a crazy estimate, half the retail trading community is trading exactly on MDR. When they see a plus 10% MDR, that plus 10% MDR may change to like plus 15% MDR because so many other people are also trying to get their limit buys filled, which is going to, you know, propel price higher. So I'm not worried about everyone trading MDR and then everyone getting screwed, because I think that this is one of the things that is a little bit more of a self-fulfilling prophecy. The only issue where this can happen is, let's say a scenario where, again, half the retail crowd is trading on MDR, but instead of limit orders that don't get filled, they just market buy whenever they see bullish MDR. The one issue there is they could get filled before you get filled, and price could run away upward on bullish MDR, and you could be left behind. But I'm not that worried about MDR becoming obsolete. I think if anything, if a lot of retail traders who don't really know what they're doing try to use MDR and play it, I think we can even take advantage of that, and that's going to further fuel MDR extremes. What traditional TA indicators do you use with your system, if any? You know, man, I don't really use a ton of TA anymore. If we look at my indicator list, and you guys can just like take a screenshot and copy these if you ever want to look at them, not many of these are technical indicators. ATR, yeah, because ATR tells us about volatility, so I do recommend looking at that one. VWAP is awesome as well. I talked about that in my video. Now, I would say my favorite technical indicator, but it's not really a technical indicator, is the volume profile. I mean, the volume profile is just a very, very helpful tool. That does require TradingView Pro or Premium, though. Another great technical indicator, crypto market breadth. That one is a custom indicator made by M59, and that shows you how many coins in the cryptocurrency space are above their moving average, and how many coins in the cryptocurrency space are below their moving average. So of technical indicators, I think that this is definitely one of the better ones because it's showing something that most do not show you. Only drawback is that it takes a long time to load because it's loading like 50 of the top cryptocurrencies right now. I think it's set to that. 40 of the top cryptocurrencies. But the typical strategy with this is we want to look for when all of the cryptocurrencies are under their moving average to buy, and when all of the cryptocurrencies are above their moving average, we typically want to sell. So with this indicator, with the crypto market breadth, let's look at a few examples. Here from here, there to there, and that arrow there, we had a crypto market breadth of about 0. As you can see here, like 3.8%. What that means is that of the top 40 market cap cryptocurrencies, only about 1 or 2 of them are above their moving average that we set. And that's a pretty good sign, because if they're all below their moving average and they've all already had their sell-off, then the odds are decently likely that price is just going to have to rebound. Because price is not going to go down forever. These supply runs do have to end. And then you can see that price did go higher there. Another example would be here, where the crypto market breadth got very low. Here as well, and price went higher. This is a pretty good one as well. Crypto market breadth got very low right there, and price rose. But yeah, I mean, to be honest, to answer your question, I don't use a ton of technical indicators. However, what I do want to talk about, and what I wanted to transition the stream into, is looking at some advanced indicators. And what I'm about to show you isn't MDR, it's not BAS, it's something a bit different, but it is free, and you can use it with or without a TensorCharts subscription. So let's go to tensorcharts.com/u/bitmexstats, and I hope you guys can see everything, and my face isn't covering anything. So what I want to give you here is just a few strategies that you can use on trading Bitcoin and on trading Ethereum. And we're going to be looking at open interest, we're going to be looking at liquidations, and we're going to be looking at the price and volume within here. So what you're looking at here, if you haven't seen this before, this is just price and volume of XBT or of XBT on the 5-minute candlesticks. Now what you see here is open interest. So what open interest shows is how many contracts there are on BitMEX. So this includes both long and short contracts, and this number is going to go down when a lot of traders are getting stopped out or getting liquidated, and this number is going to go up when a lot of traders are opening short and long positions. So there are many ways that you can use open interest, and these ways are not typically covered online. The traditional way that you're supposed to use this kind of indicator, the open interest here, is open interest rising with the trend confirms the trend, and open interest declining with the trend means that the trend is likely to end. That's what you're going to read if you look up open interest. That's what's going to say in the strategy. I think that works pretty well for commodities, for equities, but I think crypto, especially BitMEX open interest, is something a bit of its own nature. And I say that because I think that BitMEX of any space is well known for not personally hunting stop losses and liquidating traders, but it happens all the time. So what we want to do here is look for two things. One, we typically want to take the other side of the position when a lot of traders are getting liquidated. That is here. And whenever you see red, that means that longs are getting liquidated. Whenever you see green, that means shorts are getting liquidated. We typically want to short when shorts are getting liquidated, and we typically want to go long when longs are getting liquidated. So what we see here is right there, we had 14.8 million longs get liquidated. This is just a beautiful spot to buy, especially after you get a confirmation bullish candle right there. I mean, that would have worked well. Up here, we get a high tail on the 5-minute or an upper wick, and you can see we had a liquidation of $6.8 million. So $6.8 million wiped off the books. That would have been a great short. And if we keep going back to see other kinds of liquidations and what would have happened, boom. Here, longs had gotten liquidated here. We had $1 million worth of liquidations here. Great time to buy. And then what happened here? We get high volatility upward, and we begin to see those shorts get liquidated, and that would have been a good time to short. Longs get liquidated, good time to long. And I can just keep doing this forever and ever. Shorts getting liquidated because it's green, and shorts got liquidated, and shorts got liquidated here and here. Great time to short. Price did go down. Here we had 368K worth of long liquidations. Great time to buy. Price just went higher. Here as well, we begin to see some short liquidations, and price does go higher, but not in the strongest fashion. So that's one way that we can use liquidation data to trade against these traders that are losing money. And this is also covered in the guide. Now, what I also want to talk about is a strategy that I have talked to a few traders that I've mentored. And this is a bit more of an experimental strategy, but I think that it does have its merits. And there are reasons why I think it can work well. This strategy is not covered in my videos, and this strategy is not covered in the guide. So let's dive into what I'm talking about. So we're just going to focus on price, and we're going to focus on open interest here. Now, typically, like I had said, BitMEX is well known for hunting stop losses and for liquidating traders. So we can take advantage of that. How? Whenever you see a rise in open interest, that means that there are traders who have not yet gotten stopped out or getting liquidated. There are traders who their money is still on the books. When we see open interest drop dramatically like that, open interest dropped, that means that traders had gotten stopped out. So one way that you can trade is whenever you see a massive drop in open interest here, that's a good time to take a reversal trade, to take the other side of the trade using a limit order. Good time to buy. Good time to buy here. You can see. If I keep going back, this was indicated as a good time to short. And that would have been a great short if you had shorted here and then been able to take profit where the longs had gotten liquidated, and also where we had a massive drop in open interest. That would have been a very interesting trade you could have taken. Let's look for other drops in open interest and what happened. Let's look at this price range here. Price drops here, right? And we get a massive loss in open interest. So what does this mean? This means that a lot of traders have either A, gotten stopped out, B, got liquidated, or C, took profit. Now, when a lot of traders take profit and also a lot of traders have gotten stopped out, typically the trend likes to reverse, as it does here. Price goes up. And you can see again that price makes another stop loss on here, and then open interest really drops here. So then you'd think, okay, now the longs have gotten stopped out, the longs have gotten hunted and killed, and now price goes higher. And then it kills the shorts of the market. And how do we know that? Well, here's the good thing about open interest. It gives you a confirmation of traders getting stopped out. It gives you a confirmation of traders getting liquidated. So when price goes above here, we know that those traders have gotten stopped out and that there's a very high probability that price is going to move lower soon. And it did. And I can just keep going back on the 1 hour time frame to look at other massive drops in open interest. Here was an example. Stops out many traders and price goes down, and you guys get the idea. Now, one thing that you can do is not just look for these drops in open interest, But you may wonder, when do I know that we're going to get a massive stop loss hunt and that a lot of traders are going to get, stopped out or liquidated? Well, rising open interest is telling us that there's more money, including retail money, coming onto the books. And when we see a steady increase, in this open interest and more money coming on, like this, I mean, these lambs are just getting ready for the slaughter. And they got slaughtered here. How do I know that? Well, we know that open interest began at about 405 million. Open interest then came to about 470 million as price moved higher. What was open interest at after this price move? Open interest dropped to about what looked to be about 430 million. So that's a drop of what? 460 to 470 to 430. That's like $40 million wiped off the books. Lots of traders getting stopped out and losing money. So that's one way that you can use open interest to see how many traders are losing money. And steadily increasing open interest, then they all die. And then you can see steadily increasing open interest. Hey, look at this price point. Oh, no one's gotten, there hasn't been any massive of the longs or shorts yet. Just steady increasing open interest. They need to die soon. So then you get this double stop loss hunt that definitely stops out or liquidates within the vicinity, of this price range. So just to make that strategy a little bit simpler, you see an increase in open interest. We can expect that a massive volatility move is likely to come and stop out many traders. And if that massive volatility move does come and stops out many traders like that, then it's our time to take those traders' positions. Because if we know that the dumb money bought here and gets liquidated here, we can buy at a reduced rate. So instead of buying here, we take over their positions by buying where they're getting liquidated. And just, being sharks eating fish. Okay, I've done way too many analogies. You guys get the idea. We look at open interest to see the amount of money on the books and to see, how much we can wreck these guys. All right, so that is another way that kind of segued from technical indicators, to open interest. So let's go for some other questions here. Sup Doggy, who's your favorite trading educator? Do you recommend Adam Grimes? And he changed my life. Damn, that's a good compliment. Anyone else? I put this in my. I put this in my trading. Okay, what is this? Error. Ugh. Hopefully that doesn't impact you guys too much. I put this in my trading books, and I made a video on that. I think the best trading books are actually books on psychology and books on social psychology. Because what I was actually able to find was when I read many trading books, to be honest, a lot of them said the same thing, except Grimes. Adam Grimes is awesome. His art and technical analysis book is actually really good. But what I'm saying is a lot of the other trading books that I read are just kind of saying the same thing. They were mentioning the same indicators, the same ways of thinking, and there's just nothing innovative. Can you guys, okay, I think you guys can still hear me. Yes, what I was saying is, and if this Wi-Fi really goes bad, easy, I'll just go on Discord and we'll go on voice chat and we'll be all fine. Yeah, it's psychology books. So I would recommend social psychology books, just any book that talks about the crowds, because it was those kinds of books that gave me ideas for looking for sentiment, for looking for order depth, for looking for these alternative ways of thinking and alternative ways of trading that really helped me. So I don't think I'm the best guy to ask for trading educators or to ask for trading books. But if you want to PM me, I can give you a lot of links to some really good psychology books. All right, now let's go back to here. And I'm going to go to supply demand runs. And this is a part of the video that I was really looking forward to. All right, so I am going to ask you guys a few questions here. And this is going to be a bit of price action and volume practice, supply and demand run style. All right, so you're first looking at FUSD. Don't look back in time. I know it says the time here. Do not look at March 6th. Please don't. What do we see here? I'm going to try my best not to reveal these, but this is meant for you guys to practice. All right, my first question is here. You see FUSD, you see the price and volume. Does this look like the kind of market that is going to A, consolidate, B, move up, or C, just shoot down? I'm going to give you guys, what, like 20 seconds because buffer and all that. So what's going to happen to that price? All right, let me play it. Now, if you had said consolidate, you would have been correct. This move actually turned into consolidation structure. Now, you may wonder why. Well, and this was the information that you were given. When we see a volume spike and we see high volatility, we typically expect one of the two things to occur. We either expect price to consolidate, like this, or we expect price to just move the other direction. Typically, what I've noticed is when price is consolidating like this, that it's not uncommon for price to go just above the high, you know, and just stop out some shorts, and then also liquidate any shorts who hadn't been liquidated yet. So this did turn into a period of consolidation. And then after this period of consolidation, of prolonged consolidation, then that is where you get the price drop. Because typically after a volume spike leads to consolidation, and that consolidation lasts for a long time, the longer the period of consolidation, the more likely the price is going to go the other direction. Oh, and we just saw another volume spike here that did change a lot of things. I kind of played this one a little bit too quickly, but do notice here, this is a beautiful example of a fake out. Not of a stop loss hunt, not of anything crazy, but price was going up. And there are probably a lot of short-term traders, some scalpers looking at Ethereum, and they're wondering, do I take profit? What do I do here? So price makes a quick dive down with 2.735 million sold in 1 minute. After that sell volume spike, price has enough fuel to go right back higher. So it's these kinds of fake outs that can occur during trends. And I would say that the best way to prevent yourself from being faked out is A, you have a stop loss place. Let's say you have a stop loss place here. You hold that stop loss. Don't move it. You know, don't you just, I mean, you can move it, but you don't panic and market sell and just try to lock in your profit. You wait, because this was a supply run, guys. And supply runs are not going to last forever. So even if this was, let's say, like a strong downtrend, you bought here, this was actually a strong downtrend and price went lower, okay? Price, very likely, it's really improbable that price is just going to shoot down for no reason if you're looking at order depth and MBR and BAS. What's more likely to occur is we get a supply run. You know, we get then a bit of a demand run, maybe some equilibrium. But lesson learned, I mean, lesson shown here, don't just market sell in these kind of panic moves, because that just propelled price higher. Now what we see is, I think you guys know what this is. So what do we think here? Is this a genuine stop loss hunt and price goes lower? Is price just going to continue consolidating? Or is price just going to drop like crazy in a downtrend? So you guys can, if you guys want, you guys can look down here. Okay, so you're saying down. So you think the price is just going to drop. All right, well, let's see, man. That was interesting. Okay, and then we get the craziness there. I'm not going to play the craziness yet because I still want to keep my scale. All right, let's go take a look at the volume here. So price does move down. Price moves down about 0.6%. So I would say, Nat, that you are correct. Price doesn't really move down. It does move down, though, you know, to your credit. And then what we get is another touch of this resistance level, and then price does go higher. And then we have a major volume spike, and this kind of made the move a lot more obvious. And this is an example I want to highlight, because this is late stage buying. So you may say, hey, how do I know when the volume spike means that the last buyers are buying an uptrend and the price is likely to reverse? Well, first of all, the longer that the uptrend has been going consistently, the more likely that uptrend's got to take some major retracement soon. 2, take a look at the volume. There's a really interesting volume pattern in here that you can see. This volume spike was larger than any volume spike before. So that's telling me that in a short period of time that was here, more traders had bought or established positions here than at any 1 minute point in time before. And that's obvious by looking at that. So price tanks, as you can see here, and a ton of people buying here. So when you're looking at late stage buying or late stage selling and you're saying, God, should I take a reversal trade? Here's what you look for. How big is volume compared to the short-term volume compared to the short-term volume transacted during the trend? If you're looking for late stage selling, we want to look at, oh, this is a beautiful example right here. You look at this downtrend here, you know, down, up, down. And we see a volume spike here of a sell spike, right? And price keeps going down, price keeps going down, and then you see this amount of volume transacted. That volume is higher than all volume before it until you get to this point here, but that's not part of the downtrend. So this was the highest volume point in the entire downtrend, and it's a volume spike of about what looks to be about 9 times. So this is a major volume spike, and it is occurring after we get a downtrend, multiple downtrends, and then that late stage selling. So typically when you see that termination selling or that termination buying, you're going to see 2 things occur. 1, very high volatility. That's here. That is very high volatility in a very short period of time. 2, higher volume than you've seen throughout the entire trend transacted in a 1 minute candle. And same thing here. Termination, late stage buying, uptrend, 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 price goes very high volatility. We get a 1.6%, you know, upswing, and the highest amount of volume transacted than ever before. This is when you want to be a market maker, because if you notice this stuff and you're not, you know, the dumb money who just market buys because they think it's just going to keep going up. If you're the trader who can see this is high volatility, this is high volume, this is probably late stage buying, and you place a limit sell order, I mean, you would have gotten filled at a very good price, and boom. All right, now let's take a look at here. This is interesting because do we think that this is late stage selling and that price is going to rebound? What's going to happen here? We just saw a pretty strong uptrend get what looked to be terminated here. Is price going to keep going higher? You know, are we going to see some underwater longs trying to sell? You know, what's going to happen here? I'm going to ask you guys that. And White Rock, yep, I will. First, we're going to look at these practice examples, then we'll take a look at the the current price action volume. All right, so hopefully you guys have decided whether this was going sideways, up, or down. Let's see. So it looks like just it consolidated. And then we see a bit of movement upward. Yep, so it does make a bit more sense here. We see a large amount of selling here. High volatility selling and high volume, and price goes higher. Now, do we think that price, is this a stop loss hunt, or are we going to wait for high volatility and high volume to make a decision? Looks like price is just still consolidating here. All right, so now we're getting some higher volatility and higher volume, but I'm not seeing a massive amount of volume transacted yet. I want to see some consolidation, oh, okay, that's a lot of volume. Where was that transacted? Here? So this must have been just a large limit sell offer wall, and then some trader must have market bought. That's why that much volume was there. That's interesting. It's going to be interesting to see what happens if price goes back to that price point after so much volume was transacted there. Let's see. So price went back to the price point that I just talked about, that high volume spot right there. And it acted as support. And we just get more consolidation. Okay, high volatility move downward. I think this is just gonna, move upward. And it does move upward. This move was a bit more obvious too because it's also a stop loss hunt. A, it goes below these 2 lows. B, it's higher volume than ever before in here. And then C, it's late stage selling, as you can see. So this was a great move to limit buy on if you want to do market making. All right, now let's take a look at the recent move here. All right, now I'm going to pop on what we had just talked about, looking at liquidations and looking at open interest. So let's go take a look. What do we see? We see some shorts getting liquidated. We saw shorts get liquidated at 38.66. 1.5 million is actually a good amount of shorts getting liquidated. So I wouldn't be shocked to see one of two things happening right now. A, we go a little bit higher to liquidate more shorts and to stop out any traders who try to short here and put their SL right there. Or B, we could just go down. I think that both would make sense. Typically, when I see this liquidation, I would expect price would typically just go down. But I wouldn't rule out, these higher levels because do you think that this is high enough volatility and high enough volume to end the uptrend? If you do, then maybe this could be a spot to short. But I don't know if this is enough high volatility or high volume. Perhaps we get just a high volatility, high volume move, and then price goes lower. If we actually look at the open interest, because we just talked about liquidations, interesting. You can see that the open interest just completely fell here. So that's showing me that that move had stopped out traders or had liquidated some traders. And now open interest just is kind of going back higher. If I see open interest continue to increase, then it would be more likely to see a stop loss hunt. If this open interest just keeps increasing, there's more money flowing in, there are more people opening positions in consolidation, then I would expect a stop loss hunt. But let's take a look at the MDR because that is my #1 indicator. And it looks like MDR is just not really telling me much, just minus 1.24. One of my favorite MDRs to look at is actually Ethereum. So let's go take a look at the F. Yeah, and this one's looking a lot more bearish. This is interesting. Ethereum's looking a lot more than Bitcoin right now. Maybe we do get the stop loss hunt, but Ethereum's just looking really, oh, that's beautiful. It went just above 133 and then went right back down. This is looking bearish for Ethereum. I think that A, again, we get a stop loss hunt, price goes to that around here, or B, we just go down. I think that both would make some sense. Volume spike up here, right at the top, as you can see. But this is an interesting place where we can scalp. We had a supply run, and then we had a demand run, and then we have a supply run here. So you could have gotten your limit buy filled here if you think price is going higher, and if you thought price was going lower, we have a demand run that you could have shorted with a limit sell there. So I think that I want to see open interest increasing further, and then I would expect price would make a stop loss on. But this very bearish MDR, it went to a low, guys, of minus 12% at 925. I think that's what? Here. So around here was when we had a lot of bearishness. So these prices might not be terrible to sell. That is not financial advice, of course. Maybe we do get a stop loss hunt, but you're right. I think that these liquidations combined with the fact that we have a very bearish MDR gives me a higher probability that price is going to go down than price going to go up. Looks like it's going to slightly up again to pick out the rest of the SLs, so it makes sense to place a couple of sells there to average out. One thing you could do is a short combination, and this is covered in the guide. Where is it? Boom. Short combination. This is when, let me just put here. You make this play when you're bearish on something, but you don't know if a stop loss hunt's going to happen or not. Here's what you do. You place a sell limit just above the consolidation period. So that's here. You place your sell limit, just above or higher if you want, and you place a sell stop just below. So you put your sell stop order. You put your sell stop order, at around the 132.5. Do not use that exact price, please. Lord help me. Bitcoin trading challenge just told me to do this, and I got liquidated. Yeah. You could put your limit sell here at 130, 133.5, maybe 133.6, 133.65. Or if you think that we're going to get high volatility upward, you could put it, right above the 134, or even like right above the 135, above the 136. That's if you do believe that a stop loss hunt will occur. And to recap for those who might have been listening, When we see in consolidation that open interest is increasing, we know that money is flowing in to retail positions and into BitMEX. When money's flowing in to consolidation period, I'm expecting a stop loss hunt to occur. So the higher that we get open interest to go, the more money that's able to be stopped out or to be liquidated. So we'll see. If open interest continues to increase, then high volatility may be on the books, because if there are a lot of more contracts on the books, being open interest is higher, then there will likely be a higher amount of liquidations, a higher amount of SLs triggering, which would probably push price a little bit farther in the direction that it's going. So if price was to go up, and if we see a lot of shorts, meaning open interest is very high, then price could really go up and kill a lot of shorts and liquidate a lot of shorts. But yeah, I think the whole idea of a sell stop here and a limit sell there with a stop loss right above is not a terrible idea for a sell combination. That way, it doesn't matter if price goes down, doesn't matter if price goes up. You're selling no matter what. So that's the advantage of a short combination. So you asked, would it make sense to place a couple of sells there to average out exactly what I said would work? But you know what you could even do, and again, not financial advice ever, is you could put you could run like a limit sell here, limit sell here, limit sell here. Or you could just do a limit sell here and a limit sell here and then maybe a limit sell here. That's one play you could make, or you could just do what I was talking about, which is just the short combination. I put my sell stop here, I put my short, my sell limit here, I'm good to go, and I don't put those. So it's your option. You can do whatever. Yeah, but it's nice to put a sell stop here so the price tanks. Your sell gets filled and then you get it, which is nice. So that would be my non-financial advice, is to use a short combination. Can you elaborate on who is hunting or what really causes hunts to happen if no one's really doing it? That's a really good question. Jesus. Love to answer that. So let me first do what causes stop loss hunts to happen if no one's really doing it. Well, first of all, there are multiple people doing it. And it's not just one person. But I can tell you one kind of play that institutions or HFTs can make. Here's one. Spoofing. Imagine that you see a large amount of limit buy orders during consolidation. You see a large amount of limit buy orders, at the lower end of price, near support. So naturally, over a few hours, a lot of retail traders begin to put their stop losses just below that large limit buy, series of large limit buy orders, and of course that price low. And then what you see is price begins to go down, just naturally. No one's causing it to, but price begins to go down a little bit, and then out of nowhere, the rug is pulled. All those limit buy orders that you thought were real, that were placed at support, are pulled. And what comes in place instead? That same HFT or series of HFTs that had put limit buy orders at support, well, guess what they do? They now put their limit sell orders. So what they did is they pulled other limit buy orders. Now they're only putting limit sell orders. And what they've done is made sure that a lot of retail traders have put their stop losses just below support and just below that previous bid wall. And then naturally everyone market sells. They don't have to market sell. They can if they want. But other traders are going to see that high bearish pressure and just go sell, 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 sell. Price is going to sell, sell, sell until what happens is those stop losses get triggered. But when those stop losses get triggered, what can the institutions and HFTs do and the market makers? They could put limit buy orders just below those levels of stop losses and they get filled. Price gets a little bit more lower volatility, or even better for them, price just shoots right back up. And how can they ensure that price shoots right back up, right? Well, what they can do is after they've made this kind of stop loss spoofing play, after those stop losses get hunted, their limit buys get filled, is they can they remove all of their limit sell orders and they put on a lot of limit buy orders, and that's going to spoof the market back up. And they just got filled at a much better price. Because before, they were going to get filled at support, right? Price would go down and they'd get filled at support. But because they pulled their orders, they're able to buy at a much lower price than manipulate the price back upward. If it's institutions, they're doing it to get lower buy prices or seller high prices, or how do you avoid that as a retail? Avoid the typical stop loss areas. Two things. One, try not to put your stop losses at obvious price points, like just beyond a psychological price level. Ethereum, let's say, is trading at 130, or let's say Ethereum's trading at 105, don't place your stop loss at 99.9. That's just suicide, you know? Another one is if price is consolidating for a long amount of time and open interest is increasing, and you place your stop loss just below a recent low in that consolidation, you are very likely to get hunted. So don't do that. You might say, well, then what's the alternative? I would say you could do a much deeper stop loss, a stop loss that's a lot farther away from the current price. Or you could do more of what I do, is I look to enter on stop loss hunts. And the only worry I really have about are secondary stop loss hunts, so that after I get filled, I worry about, you know, another stop loss hunt, but I'm typically fine, you know, with that happening because that typically doesn't happen. Typically it's just one move and then price goes in the other direction. But my best tip to combating stop losses and bad placement is by actually place your limit orders where you put your stop orders. Place your limit orders where you actually thought that would be a good idea to play your stop loss orders. When I started doing that, guys, like on trading a few coins, I actually found it worked really well. And all I was doing is just taking advantage of retail liquidity. And I know that on some altcoins, you're not going to get that kind of spoofing stop loss play that I had mentioned where you get lots of bids. People put stop loss below the bids, bids pulled. Limit sell orders are just going to clamp price down to force price lower. You know, on altcoins that might not happen, but on altcoins what will happen is if you place your stop loss where everyone else placed their stop loss, you're going to get filled at a terrible price because you're just going to have to put your stop loss higher than everyone else's, I guess, in that liquidity pool so that you get filled first, win price, you know. But I think that the best attack, the best offense, the best defense we can do is to place our limit orders where we would normally place our stops. And honestly, guys, I think that there's no better example for this besides, what's his name? Who is the guy who entered really, really well? Crypto is Key. What he did was he put his limit orders where he normally places stops. Overnight, before this craziness happened, most people would call him kind of crazy to put his limit orders there, and they would say, okay, did it really just stop streaming right when I was getting to that point? Okay, that's annoying. Hopefully it comes back up. But what he did was he was able to put his limit buy and limit sell at places where most traders around him would probably tell him that that's where they put their stop loss. And look what happened. He got a 3.33% profit. So that's one thing you can do. That was a great explanation. Thank you. I guess that would work every time except for the only one time it's a real trend. Two things. One, no, it's not going to work every time because you're going to get secondary stop loss hunts, and those hurt me every day. But to protect yourself against a secondary stop loss hunt, what you can do is fill half of your position on the initial stop loss hunt, expect the secondary stop loss hunt, and then fill a little bit more when that stop loss hunt occurs. I guess the only time that would work is when there's a real trend. When you say real trend, you mean, I think you're meaning a long time frame, a higher time frame trend. So I think what you mean by a real trend, correct me if I'm wrong, is a trend, you know, on the 1 day or on the 4 hour where we get a serious uptrend or a serious downtrend. Honestly, guys, in that situation, that does become a little bit harder to do market making. Because, well, here's what you could do. If you think it's a strong trend, yeah, like price keeps going up or going down. I think the best thing that you can do is look at MDR and BAS. You go to the market depth ratio and you look at how bullish or bearish it is. If the MDR is very bullish, and let's say that price goes up, and you think it's a stop loss hunt, but MDR is very bullish, don't buy. I mean, don't short, don't sell. Bad idea. MDR is bullish, and let's say BAS is bullish too, meaning a lot of people are still trying to limit buy. No reason to short. Another example, a lot of people think it's a real trend. Price goes up, massive volatility, massive volume. You look at MDR, you look at BAS, and they're very bearish, then you short. So I think my answer to that is when does it not work and how do we mitigate against that? The best chance you have against mitigating against that is using other indicators that are not technical indicators. Use order depth. Look at liquidation analysis. Look at open interest. Look at these kinds of different metrics, and that'll tell you the likelihood that an uptrend or a downtrend continues. Okay. So what we can also talk about just for the final part is BitMEX and the order book. So this is a bit on supply and demand runs, but this is one of the most important parts of trading. If not, this has got to be like top 3 most important parts of trading. Supply and demand runs. Now, I've talked about this a bit in the video before, but basically a supply run is exactly what you see that's about to happen. When we have a lot of offers being placed near the current price, not many bids, and we see an influx of market sells that, pushes price lower. Now, when we look at supply and demand runs, we're not trying to be bullish or bearish. That's not the point. What we're trying to, I'm not going to say I want to sell just because of the short-term order book pressure. That's not that smart. Because if you just market sell here, you're not selling at a good price. And if you just try to limit sell here, you're just not going to get filled. But let's say that I'm bullish on this, and I'm not, but let's say that I was bullish on this for some reason. That what I would want to do is wait for this drop to begin, and then I would place a limit buy order that would hopefully fill at the end of that supply run. Because supply runs and demand runs, they don't last forever, guys. And if you are bullish, then you could try to place an order at the 38.56 or 38.59. Beautiful, right on time. So we can see that volume is beginning to pick up. This may have stopped out some traders. And you may wonder, how do we know if it stopped out traders? Well, we have a handy dandy tool called, and it did stop out some traders. Great. Open interest dropped. Look at that. Open interest dropped from about 478 million down to, I don't want to say, it didn't drop by a ton, but 478.6 mil down to the low, which is what we always want to use. So about $600,000 have just wiped off the books, and that's a very good sign. So when we want to buy, we want to see price go down and open interest to drop, because that's telling me that longs are getting liquidated. Longs are market selling out of panic. Longs are, getting stopped out. So I saw that there's a drop in open interest there. And when I look back at here, that's what I want to see on a supply run. So I'd be more comfortable getting my limit buy order filled here. Okay. And let's say I was bearish. What would I do? Well, you'd want to wait for a demand run. You'd want to wait for price to go higher, and then you'd want to short once you get that demand run. But it is going to be, the 38.57 does look like, is price going to drop to 38.57 or 38.56? We shall see. One of the harder things that you have to think of when we're looking at supply and demand runs is how long will they last? And typically, one way to make it easier is when you see high volatility and high volume. High volatility, high volume typically ends trends, as you can see here. High volatility, high volume, and price went back down to a supply run. So when this turns into a high volatility, high volume pattern, the probability that the supply run is over is a bit higher, and that's where you can just slide in your limit buy order, get it filled at a beautiful price, and then price goes higher. Now, if we look at Ethereum, we can see that, price went in a successful supply run, and maybe a successful stop loss on. And if you want to get your order filled, you could have gotten filled at 132.4, 132.5, 132.35. You can see that the supply run began here, and it just was very successful. It just was able to go down here. I'm going to do the same thing that I just did before. Let's look at Ethereum, and let's look at the open interest. Not much of a change here, to be honest. Looks like price did go down, but if I look at the 5 minute just to group this together, it doesn't really show me much more either. I'm not really seeing a massive drop in open interest. So unfortunately on Ethereum, it doesn't look like a lot of traders had just gotten stopped out at this level. Not a lot of traders had, not a lot of longs had gotten liquidated, or I don't think any longs got liquidated, or market sold out of panic. So perhaps this demand run turns into a supply run. I mean, perhaps we'll see. What that would mean is price goes up in a demand run and then goes back lower for a supply run. But we will see. Did anyone comment on? Oh, okay. Oh no, you already commented that. All right. Man, so many people were longing at that top. Geez, which top was it? On the demand run for XBT, for Bitcoin, yeah. You mean here? I think, do you mean like up here on the top or what? But currently price is at equilibrium. And if you wonder, what do I do in this situation if I'm bullish or bearish? We can't really do much here. If I'm bearish, what I can do is I can wait for price to go in a demand run. I wait for price to go on high volatility and high volume on the 1 minute. I wait for open interest to fall, and then I get my limit sell order filled at a good price. If I'm bullish, then I hope that this turns into a supply run and price continues to go lower, and I try to get my limit buy order filled right below a recent low maybe. Or I just wait for open interest to seriously drop so that, you know, something like this, so that I know that price will likely keep going higher. And this was interesting. Price, open interest does drop on this up move, and then it drops in this down move as well. So price does go higher after doing that. All right, so I'm probably going to end this stream soon. It is going to be, it would have been like what, like an hour and a half live stream. So if you guys have any final questions or want to know anything more, to recap, we've talked about, okay, this error message, whatever. If you guys MDR, then you can ask those away. The one tool that I didn't show that I still want to show is BAS. And what this tool shows us, just for a final thing, is it shows us the order depth on BitMEX, XBT USD. So typically when we go back in time and we look at this, let me look at the 30-day. Whenever the green line is above the red line, that means there are more bids on BitMEX than offers. And you can see that when there are more bids than offers, that gray line, which is price, boom, rose easily. And this would have been a situation where someone had asked before, great question. You know, you may have thought, hey man, should I short here? You know, this is high volatility, high volume, late stage buying. Look at this. This is not screaming something you want to short. I see a large amount of bidding pressure on BitMEX, and I see a large amount of offering pressure on BitMEX at this point in time. Horrible spot to short, great spot to go long. Price went up. Price is up here. Look at the flip. We get a ton of offers coming in and not many bids. About twice as many offers as bids. And what does price do? Yeah, buy. It drops like crazy. Then what happens? More offers here than bids. Price drops. More bids here than offers. Many more bids here than offers, and price rises. Let's go a little bit more zoomed in. 3-day. That's too zoomed in. I'll go 7-day. It looks like here was another example where we began to see some separation. We have a lot more bids, so price does go higher. Reason I wanted to show that is the 5% BAS that can just help us with making our decisions. Final question is, what do you like to see? BAS 1%, 5% global MDR. Okay, first thing I look at is the 5% BAS. So my first thing that I want to look at, I'm going to go on the 24-hour. I'm going to go to minute, and I want to know who's more dominant here, the bids or the offers. Are the buyers more aggressive or the sellers more aggressive? And I also want to know how much more. How much more so? You can see here that the buyers were clearly ahead of the sellers here. So what did price do? It went up. It went up because of the amount of buying pressure. It hit stop losses, and then it was able to fill really smart traders at really good prices, like the trader today, who limit sold at a beautiful price, 38.86, and then prices just dropped. So let's say that we're back in time, and I'm answering that question back in time. The first thing I want to look at is the 5% range. The second thing that I want to look at is the 1% BitMEX BAS. And I want to typically buy when the bids are higher than the offers, so that would be here. So I could buy here because the bids are higher than the offers at that point in time, and on the and on the 5% at this point in time, the bids were higher than the offers. So this would have been a very good example of something we may want to long. And you can see some selling pressures beginning to come onto Bitcoin. And then you say, okay, you looked at the 5%. Let's say the 5% was bullish. The 1% was bullish at this point in time. Then I look at the global MDR. And I also like looking at the Ethereum MDR because strange enough, I've actually found that the 5% FMDR works really well for both Bitcoin and Ethereum. If you guys like don't believe that, go back in time and look at what price did here, and I showed it. Look at what price did when it was here. Look what price did when MDR was here. Look what price will probably end up doing within the next few hours, and MDR is here. Cough, cough. We'll see. So I like to look at 5% BAS, 1% BAS. I then like to look at specific FMDR if I'm trading Ethereum. If I'm not trading Ethereum, I just look at the global. Now global, let's get that on the 5%. Global is currently bearish. So at that point in time, because like I said, I wanted to go back in time to this point in time here. That was at 3:53 a.m. Let's go take a look at what was going on at 3:53 a.m. Here. We see a beautiful, beautiful, beautiful MDR of 5.48%. Lots of buying pressure on there. So we saw triple confluence there. I saw 5% BAS was bullish. I saw 1% BAS was bullish. I saw that the MDR was a plus 5.48%. Hey, how about Ethereum? What was Ethereum doing at 3:55 a.m., right? Well, at 3:55 a.m., it was bullish as well. Right there. We had quadruple confluence at that point in time, and that's what you want to look for. Now, the hard question is, do we always want to wait for quadruple confluence? Or do we want to take a trade based on less confluence? And that's completely your option. I got to tell you, when you get quadruple confluence and every single order depth indicator is telling you the same thing, that's a pretty damn good sign that price is going to go in that direction. But let's say you have a situation where 1% BAS is bearish, 5% BAS is bullish, FMDR is bearish, global MDR is bearish. Cough, cough. That's the exact situation that we're in right now. I would say that's more likely to go down than up because 3 out of your 4 order depth indicators are telling you down, 1's telling you up. So with that, I would say either wait for a stop loss on, or if you're bearish, you can short. And this is just my analysis, guys. Like, do your own. Look at the order depth. Wait for extremes. Wait for BAS to get very bearish. Wait for FMDR to get very bearish. And that's when you want to make your move. But if you want to be a little bit more aggressive, then you can also, not wait for an extreme MDR BAS change and just do it now. All right, guys, so I'm going to head out. This was great. I'm glad I was able to answer all the questions today. I entered 100x because I coughed. Oh, Jesus. I hope you're not serious that you entered 100x short. That seems like a terrible idea, especially with a high volatility stop loss hunt move on the books. That could easily happen. I mean, yeah, but guys, let's just take this away from what's going on now, because I can give, what is the line? I can give a man a fish, and yeah, you'll eat the fish tonight. You'll enjoy that fish. Or I can teach you, I can give you a fishing rod. Teach a man to fish. And I'd rather teach you guys how to fish than to just give you, this is what's going to happen. Like I had said, it's more likely to be bearish than bullish, and I believe that. But I want you guys to think of these things. I want you guys to look at the price action volume, find these stop loss hunts, look for open interest, look for traders getting liquidated or stopped out and try to take their positions. We look for multiple indicators of order depth. And if you do all this and you practice it, then you're going to get successful. And currently, trading in 2019, so far I've had the best 3 months, 2.5 months so far that I've ever had. All I've been doing is just exactly what I was talking about here. Looking at open interest, and then also 80% of my time just looking at MDR and BAS, because MDR and BAS confluence work really well. So, you'll catch the best white CVS ever. Yep. I mean, this does have a learning curve, guys, and the only way to go over this learning curve and to actually get to know all this information is not me. I'm not special. It's to learn it yourself. Is to look at historical patterns, to practice in ways that I've mentioned in videos, and just to take the time to try to develop pattern recognition with these skills. And that's why I post in the challenges and practice so much. It's to get you guys better pattern recognition for the future. All right, guys. yep, you guys got a lot to learn and a lot to do. And hey, we'll see what Ethereum and Bitcoin do tonight and see the shenanigans that they have in store for us. With that, happy trading, and I can chat with you guys a bit later within the Discord. See you guys.